Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. So check this out. So check this out here. So this is let's actually look at the yield curve here, right? And I'm going to go down to the yield curve. So check this out. Check this yield curve out. People worried about the yield curve, okay? So if you go back and look at all the different, like this is the yield curve here. This is where we are right now, okay? March 2022, as you can see right there. You can see we're on March 2022 right there. And you can see, yeah, we're getting a bit of a flattening period through here, okay? But we still have this point. This point down here is much, much, much lower than this point up here, or even these points through here. It's not until this point up here starts to get up to here. That's when you need to be worried. Oh, but John, you don't understand. This is different and so on and so forth. Okay, guys, let's just look at the facts, okay? Let's just look at the facts. If we go back to every time we saw a top in the market in the 20s and the bottom of the market in the in 2002, 2003, and the top of the market in 2007, 2008, and the bottom of the market in 2009. Let's actually see what the yield curve. Now, guys, if you don't know what the yield curve is like, you know, from the short-term rates, which what the Fed, you know, does its thing up and down, and then you got the long-term rates, which is like over here, right? These are the sort of the thing. These are sort of the rates you go off there off the longer term, right? So this is the curve. The curve is from the short term to the long term. If you don't know that, so if we actually go, let's actually go back to. Let's actually bring this up, okay? Let's actually go back to here. So I'm going to go back to just before, and watch this here, right? So just before, so this blue line here is what? This blue line here is the actual stock market. The black line is actually the interest rates. Look at this here. And you actually see, let me see, can I zoom in here? Let's actually, look at this here. You'll notice, actually, look at this here. So you'll notice the rates go up for a little bit, and then then the markets drop. Interest rates start to drop, and we go into recession. Rates go up, interest rates drop, and then we go into a recession, right? So if we have a look, check this out. Hey, where'd you go? All right, here. So let's see if I can I zoom in a bit more? There we go, like that, right? So check this out. So when we go to here, there, right there. Look at this here. See how that is a problem, right? That is a big problem. Look at this here. Short term, much higher than anything through here. And then guess what happened? Yes, we had the dropping of the markets. Drop of the markets. Oh, look at the yield curve. Very strong again, right? Interest rates are low, and then they start to build back up, and then the high end down through there. The yield curve is, the shorter end is down, longer end is up, okay? So, and then that's what happens. And then guess what happens? Interest rates go down. They start to what? They start to raise it not once, but many times, many times before the top. Not the very first interest rate is going to prick the bubble. No, okay? So, then many times go up through there, okay? And then we start to see this. Oh, look, now we've got the inverted yield curve. This is what the top looks like. This is the exact same thing that happened here before the crash, or before the 2020 into 2003. And then this is what happened here. What? February 2007. When did the actual top in the market come? 2008 or 2017. The top. 2007. The top was in. 2008 was the actual start. The start of 2008 was what? The start of the bear market. And then we went into the crash, right? So as you can see here, the yield curve actually inverted here in February 2007. And 12 months later, then we started to go into the bear market, the stair-stepping phase. Things take time. And then as you can see, that's what they're pointing through there. And then the market crashed. And then look what happened. Oh, look at the yield curve. Ah, isn't this fascinating? The yield curve, right, is short. The short end, which is like, the 1 month, is down here. And the long end up here. We have a very nice, strong yield curve up through there. I wonder what's going to happen to the stock market. And then we get, all right, and the stock market just keeps going. People were like, because interest rates were at lows for so long, that's what kept the markets going there, right? Kept going. And this is the big thing that I missed back in 2006. Right? 2016, when the whole Trump thing was going to get elected and everyone was screaming, the market's going to crash. I've only learned this in the last couple of years, guys, because I've always just been a technician, right? I've always just been a technical analysis guy. But I've only learned this just recently, right? And so one thing that we can see here is that when this is when Trump was getting elected, I didn't realize that we were in the middle of the cycle, right? Or maybe in the middle of the cycle, because we were only just raising rates once at that time, right? We only just started to slowly raise once, right? And that's when Trump was being elected. Because guess what? When Trump was being elected, if you just look at this, we're in the middle of that recovery cycle, right? And then guess what? It wasn't until because they actually rose rates once in 2016, I think it was, 2016, and then you can see here that the rates actually continued up from there, right? And then as you can see, and then we had what? Then we had a black swan event, didn't we? Then we had the black swan event. Let's actually see if it did. No, we actually didn't get. We had the black swan. That's a pretty inverted curve there, but not exactly what you look for. And then the market's dropped, and then we get to go to where we are right now. Let's actually just refresh that page now. And then we get to go to where we are right now. No, I don't want you. Right, February, March. So this is March 2022, and as you can see, this curve here is what? Very, very, very similar to what the curve looked like down here and down here. So we are just in the early part, guys. We are just in the early parts of this recovery cycle when it comes to this, and this is what a lot of people are thinking, like, oh well, the Russia and this and that and this and that, guys. The Russia and this and that is not going to affect us here in America, or us in America. I don't live in America, but us in America, right? It's that whole thing. That whole thing. That whole thing is not. It's not going to affect America yet, anyway. So it's not affecting America yet, and it's not affecting the markets the way you think it's going to be. So the whole purpose of me sharing this with you guys is that a lot of the things that you think, your ego, right? You think, oh, bad news crashed the market. Let's actually do this here. Bad news. Most people are fearful. When people are fearful, be greedy. Crash the markets. Crash the markets. If you think about a crash, right? What is a crash? A crash is what? A crash is the market pulling down. You do realize too that when the market does crash, 2008 stock market crash was 2008 stock market. That was 365 days in total. Not 1 day, not 10 days, not 30 days, not 60, not 90, not 120. It was 365. So if you're thinking the market's going to crash and you're trying to pick the top right now, I know some of you guys are like, the market's going up strong and you're like, I'm going to short this thing. I'm going to show you, don't short a strong market, right? And with all this evidence I'm showing you right now, we're only in the middle of this recovery cycle. Yes, there is a recession coming, but it's not yet. If the Fed does continue to keep raising interest rates, then yeah, maybe next year, maybe 2023, we're going to get it. If they don't raise interest rates as much as they want to this year, because just like last time, if we actually go over here, just like last time, they rose it once in 2015, 2016. Guess what? And they didn't do anything after that, did they? Right? They just rose it once, and then they kept it there at quarter base point, and they kept it there for a whole year, and then in 2017. So maybe the Fed is going to do the exact same thing. Maybe the Fed is going to do, maybe the Fed is going to the Fed is going to do exactly what they did back here in 2016, right? Maybe they're going to raise it once this year, and they're not going to raise it again at all this year. I don't know. What happens if they did do that? What does that mean? That means that recession is probably going to come around the 2024, 2025 mark. Now, if they keep raising interest rates, look at this here, right? Oh, debt bubble, blah, 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 blah. Right, look at this here. 2016, 2015, 2015, they rose it. Nothing until 2017 here. Then they started to raise it once, twice. Look at all this time they rose it. What actually happened to the stock market through that time? The stock market went through an incredible boom. So traders, when I first started trading, I lost $250,000 trading the markets. And then I got access to a few seven-figure mentors that really set me straight on what I need to do with the foundations, how to read the charts, the trading systems, the mindset, so on and so forth. And then that was the massive turning point for me to be doing really well from actual trading and being successful trading. So what I've done is I've created a course called the Breakthrough Course. And what I've done is I've actually put a whole bunch of really good education and strategies and processes that help me go from $250,000 in debt to then actually becoming a full-time trader, making a full-time income from trading. And I'm actually running a flash sale to that trading course. So if you go to johnsflashsale.com, or there should be a link in the description. If there's not, then go to johnsflashsale.com. That's JOHNS flashsale.com. Go to johnsflashsale.com and you'll be able to get access to this course now for $7. So go get access to that right now, guys, and I'll see you real soon.